GM, everybody, welcome back to the channel. Today is Thursday, the 13th of March. Let's jump straight into the charts. And I wanted to take a slightly different approach on today's stream. I'd actually like to take a little bit of a closer look at what's happening in the stock markets, because I've noticed that Bitcoin is trading pretty much one for one identical right now with the S&P 500. So I think it's very, very relevant to be following what the S&P is doing to give us an indication of where Bitcoin may likely go from here. So let's just start on Bitcoin then. Obviously, Bitcoin has tested the 300-day moving average, found a really nice bounce off there earlier on this week. From sort of Monday and Tuesday, we got the reversal. Turnaround Tuesday playing out right on cue as expected. And what I'm really looking for now is either one final push lower, closer to our support coming in around about sort of 74,000. Obviously, that is this ascending trend line. In addition to that, if we actually go onto the weekly, we have a confluence of support here with our 50-week moving average coming in at around about sort of 75,500 currently. And also, if we put on our Gaussian channel, remember, in bull markets, we tend to respect the top band of the Gaussian channel. Then you can see we've got that currently coming in at around about sort of 70, just under 74,000, and 73.8 is the previous high before our summer consolidation last year. So there's a lot lining up around this sort of $73,000 to $75,000 area. And I'm expecting this at some point to be tested. We might wick below, but as long as we hold this area on a weekly closing basis, that is a green light from me on this bull run. And I would expect this bull run to carry on and Bitcoin probably to make one final leg higher. If we go on to this chart, you see we've got a couple of paths. The last one was a bit more conservative. Sorry, the last one was a bit more aggressive. This one is a bit more conservative. And this, I think, is potentially a little bit more likely with a more prolonged period of choppiness and then going into a recovery, which will start really from sort of May, June time. We start then to make some higher highs and start to break out and look for higher prices going into the end of the year. This is really around the liquidity situation and also the fact that the Fed seem to be sort of pausing their approach just for now to get more information on the impact of Trump's policies, especially relating to tariffs. Is that going to start to push inflation back up? Obviously, we had CPI yesterday that came in better than expectation or lower than expectation. I think it was expected or forecasted at 2.9 and we got 2.8. So a slight dip there in inflation compared to what we were expecting. And obviously, that could start to shift the policy approach from the Fed. However, for now, the language has been that they're not going to move policy just yet. We'll know in 1 week. I think it's on the 19th of March. We've actually got the next Fed meeting and we'll see how Powell talks about the markets then. I think what we really need to see to get this market a bit more bullish, or at least to get me a bit more bullish on this market and to expect some upside, is to actually see the market failing to sell off on positive news. We had positive news with the inflation data. We've had positive news with Trump signing the SBR, the Strategic Bitcoin Reserve. That obviously happened last week on Friday, and price has continued to try to move down. Obviously, yesterday we saw a pretty muted response to what should have been good data. Inflation falling is obviously going to open up the door for interest rate cuts from the Federal Reserve. But it looks like the market is now starting to focus on something different. And that being, in my opinion, it's starting to say, look, will these radical policy changes from the US Trump administration actually result in something like a recession? And we need to really look at what the dollar's doing. We need to look at the stock market to get some clues as to whether that will actually happen. Obviously, it goes without saying, if we do go into a recession, then I think all bets are off and you're likely to see lower prices going into the end of this year for Bitcoin. And we would probably play out something along the lines of this sort of path with stocks coming down lower, obviously Bitcoin coming down and testing lower levels beneath the 72, 70 to 75,000 area. And then those highs, those rallies are likely to get shorted and sold into, and we'll see a trend of lower highs and lower lows throughout the remainder of this year. So it's really important that we hold this level, these supports that I just talked about. And it's also important that the general economy doesn't go into a recession. Obviously, if things really blow over quickly, we know that President Trump can be very unpredictable with a lot of what he does. So this could be a really, really quick reversal. I think right now I'm leaning towards a more slower, sort of steady reversal over the next 2 to 3 months. And obviously from there, we will have to, assess whether these rallies are actually to be sold into or whether they're not. But a lot of this will depend on how we react to the news. If we do still get news coming out and the market just continues to sell off and we go to lower prices, then that's going to be a big signal that this market is not ready to turn around yet. But like I say, what I'm really looking for is potentially Jerome Powell comes out fairly hawkish at the next meeting, says, no rate cuts for the foreseeable future, QT is going to continue. And then if the market can actually put in a bottom from there, that would obviously encourage me that we are actually seeing a behavioral change in the market. And when we get more positive news from that point, then the market should look to rally up to higher prices again. So we need this reset. We really, really need this reset. And like I say, the stock market can give us clues. We've pretty much seen we're on the fourth straight down week on the S&P. It's not looking good at the moment. If we go to the daily, we can see we're currently testing the 300-day moving average on the S&P after losing the 200-day, and we are currently at some trendline support. However, I do have lower targets on the S&P. Now, I personally do not think the US is going to go into a recession. This is mainly due to growth still looking fairly strong and the labor market still looking very strong. So usually recessions happen when you see spikes in unemployment and you start to see job cuts and job losses. We're not currently seeing that in the US economy. So this is leading me to be, all things remaining constant data-wise, this is leading me to think this is going to be more of a correction and something a lot quicker and a lot swifter. And I'm thinking to myself, potentially, either we look to put in a low here and start to chop and consolidate. And if the market can't break down anymore off things like tariff news or bad news or negative news, then potentially we could recover from these levels. But I'm also thinking to myself, if this market does want to come down more and we see a deeper correction, then I've actually got a plan and I've got an approach to get into the market at these levels here. I've pretty much put around about 30% of my capital into the market at these levels. Obviously, we've just hit almost a 10% retrace now on the S&P. If we come down lower, then that'll be a 13% drop, 16% drop. Absolute worst case scenario would be a 21% drop. Obviously, that is assuming we don't go into a longer, more drawn out recession. But if we actually look on a weekly chart, we can see this is connecting our COVID lows to the lows from 2022. Obviously, this was caused by the Federal Reserve raising interest rates. At the moment, we're not in that situation where interest rates are looking to be raised. They're actually looking to be cut. And the dollar is actually telling you that interest rates are looking to be cut because we've seen this sharp sell-off in the dollar. And right now it's struggling to bounce. So the market is expecting rate cuts. And if people are getting less interest on their cash deposits, they're going to want to put their cash to work in other places. One of those places is going to be the stock market. So stocks tend to do well when the Federal Reserve are going through a cutting cycle in interest rates. And I think we're just about to start a major one over the next 2 to 3 years. But to actually get one, President Trump knows that he needs to engineer some sort of sell-off to allow for the Federal Reserve to give the Federal Reserve an excuse to actually cut rates, or else they're not going to cut rates. And in doing so, he's actually going to put pressure on inflation because inflation is going to come down. Certainly, if they're cutting back on government spending, certainly federal spending through Doge, this is going to allow for inflation to come down. And then you get into the debate, well, are these tariffs going to be inflationary or deflationary? I think if these tariffs start to take effect and inflation remains below 3%, and the market realizes that actually these tariffs are not as inflationary as people are worried about, that could really be the catalyst to form a low in this market, and we could start to go higher significantly. And obviously, like I say, these longer term levels I'm looking at, these are lining up with fib levels that I have, the 382, the zero point 0.5, the 618, those longer term fib levels. And obviously on here, we have longer term levels of support and resistance. So these are some of the levels I'm looking at on the S&P. These are some of the levels I'm looking at on the Nasdaq. This marker here I've got in terms of this vertical line at the start of April, this is where I'm thinking potentially we might get a bit of relief and a bottom in the market. And I'm just quickly going to go onto X, because on here, this guy, this Ryan Detrick, has shared some really interesting stuff. We've got this post here just about the Mag 7 and the S&P. This is looking at the lows from last year and saying markets are currently at their 618. This is the S&P, the equal weight, and also the Mag 7, which is obviously your Amazons, your Googles, your Metas, your Teslas, etc. So look, these are at pretty important support levels. I would at least expect a bounce from these levels. On here, he's also got this, which is really interesting. Stocks have bottomed on March the 12th. The past 20 years on average, this has been the day that stocks have bottomed on. And obviously this was shared yesterday. Yesterday was March the 12th. So potentially, have we just seen a bottom in the stock market? I mean, there is an argument, there is a case for that. Obviously, you can argue that this is a different year. This is not a usual year, because obviously it's post-election. And if we look at this one here, we can actually see this is somebody's actually looked and isolated post-election year seasonal patterns. So if we look at the post-election year seasonal pattern, we can actually see that markets also usually bottom out early March. And right now, we're pretty much coming into the middle of March. So have we actually seen the worst of this sell-off? Potentially, very, very potentially. But this is just one more thing that I'm looking at that is telling me, well, maybe it's good to actually look to position into some stocks here. And by default, as we've talked about the correlation, if the stock markets start to recover from here and don't see these lower prices, then we'd expect Bitcoin possibly to do the same. The reason why I'm looking at April is, if we look at April, we can actually see with a couple of these lines, they actually came down for another dip early April. So I think it's really this black one, looking at all post-election years, we can see there's a dip there. Obviously, incumbent party loses, so that is something that has happened. We've seen more of a sell-off going into late February, early March, before things start to recover. Obviously, there's a bit more uncertainty. These are averages, so I'm looking at potentially April as being a point where we don't really look back from. We can also look at later on in the year as well, where we can see that usually in post-election years, at least, we form a bit of a peak in early August, and then we look to form lows again at the end of October. Sorry, the end of September, just before October time. So if you were positioning in, and we did get this type of move where we get some sort of recovery and sort of rally throughout the summer, which obviously flies in the face of the usual advice to sell in May and go away. But obviously in post-election years, the seasonal patterns are somewhat different. Then potentially you could be looking to reposition into the market in late October. And I'm actually thinking to myself, whilst things remain fairly tight liquidity-wise, then potentially this run here, this first run, is going to be mainly isolated to stocks, potentially to something like Bitcoin. I think during this type of period, maybe this is when we get altcoins going sideways and we get a big reset of the altcoin space, and then potentially the altcoins actually put their lows in around late September, and they actually partake in that final move along with Bitcoin and the stock market into the end of the year. So, yeah, there's some food for thought there with that analysis, but obviously that leads me to believe that certainly if we go back to the S&P, where Bitcoin is very closely following at the moment, and we put some sort of path on here, then I'm thinking to myself, potentially we get some sort of bounce here and a move lower into the start of April, and then we see things starting to recover from there. And you know, this is completely not to scale. By the way, I need to do this a bit more aggressively, but obviously we would get something like this bounce into early April, the market starts to recover, puts in a higher low early summer. People, are starting to think maybe we sell for the summer because things are going to go lower, but we are able to stabilize a rally into early August, that pullback into late September, and then what's going on, and then the rally into the end of the year. So maybe this is the path for the stock market and it plays out something like this. Obviously, this can go lower in the short term and maybe it comes through to the next target, or maybe it comes all the way down. But I don't really see the stock market, doing something like this and coming down in the summertime. I think probably if we are bearish, then we would see something more like this happening, and it would be a more sort of longer, sort of drawn out year, something along, sort of these lines. We would see that would be the more likely path. But yeah, certainly what I'm expecting right now, trying to keep optimistic and just going with the data that's in front of us. Yeah, maybe we come down to this 100, is that the 100 week? Yeah, this 100 week moving average down to the 618, and if we close weekly candles above the 100 MA, then potentially we get a decent move from there. We have seen in the past we've liked to base off the 50, sometimes the 100 MA. We've sort of come below and got back above it. Obviously, this is a bad example because we didn't go to new all-time highs. The 200, sorry, this is 200 week moving average, strong support there. So we can sort of say that I think worst case scenario we come all the way down to the 200 week, but I think it would take something quite dramatic for us to get down there. And I'm more of the view that we come here and we just shake out everybody that's trapped in longs towards the top of this market here. Everybody that's got, overly optimistic about Trump coming into the market, expecting basically an up only stock market for the next 4 years, is now getting shaken out. The panic gets even more intense down at this level. If we start to come, below 5,500 down to 5,300, maybe coming even lower, closer towards 5,000. Like I say, a drop below 5,000 would really, I think, completely shake this market out. But I think the recovery will be fairly swift because I don't think President Trump wants to have the stain on his reputation of literally coming into office and causing a recession. So, even though he says he's not looking at the stock market, I believe he very well is, and maybe this is something that plays out. And for that reason, I'm personally, like I say, I've already accumulated some stocks at these levels. I'll be looking to accumulate more at these major targets. So this is something I'll cover going forwards on these videos in terms of what the stock market is doing. Like I say, just going back to Bitcoin, then to finish off the analysis. Right now, I think probably the quick recovery is maybe a little less likely. I think this needs to grind out over a period of several months, like we saw back here, obviously last year, from pretty much getting into this range. We were then in that range for a good 35 weeks. And if you sort of said we came into this range around here, then we could be in this range for even longer. That sounds pretty pessimistic, right? But maybe it needs that sort of reset after obviously such a bullish few years. And I'm thinking to myself, if the reset is going to come, it probably comes now when stocks are correcting as opposed to next year. So I'm thinking that the 4 year cycle, as we had previously known it, is under risk, it is under attack and under threat at the moment. And it's starting to feel like we're actually going to follow a different path where this market or this year is going to be slower, is going to be more of a reset. Like I say, potentially we do follow the bearish path and we do come down lower, but then we're going to see better times over 2026 and 2027, 2028. Certainly, if the stock market goes into a full-on, melt up over those years after the much needed reset that it's getting right now. So, like I say, we're going to take it sort of week by week, day by day. I'm going to keep on making these videos. So if you have found this video interesting, please do smash the like, share with a friend, and make sure you subscribe if not done so already. And I will speak to you all on the next one. Thank you very much for watching. Have a great day and talk to you all again soon. GM, 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 GM.